Good afternoon. Welcome to DelfinGroup Investor Webinar. Today we have the CEO of DelfinGroup, Didis Admidiņš, and the CFO, Aldis Umblejs, with us. We will be walking you through the recently announced financial results of first half of 2024. After the presentation, we'll be happy to take your questions. Please submit them through the Q&A box on the bottom of your screen, either with your name or anonymously. This session is being recorded and will be available for rewatch shortly after the call. Didzi, Aldi, please proceed.
Thank you, Eva. Hello, ladies and gentlemen, our shareholders, bondholders, and other investors. I am Didis Admidiņš, Chairman of Management Board of DelfinGroup, and today there is also Aldis Umblejs, member of Management Board.
Hi.
And today we will present our unaudited results for 6 months of this year. And basically, yes, I will cover the information about our key results, how the business is going, about business highlights, and later Aldis will inform about business performance and financial data. And as always, the main section is questions and answers. And we will answer the questions which was already sent. And of course, we will answer all the questions which will be like new ones. Okay, let's start about key results. First of all, I want to say that this quarter actually for company was quite successful. And if we go like talk first about loan issuance levels, I have to say that there was development of that, and as you see, this quarter was the best one in the history of the company, and we have like about 4.4% better result as first quarter of this year, and significant plus 20% if we compared quarter of quarter to previous year. And basically, this is like a result of marketing activities, of our credit scoring activities, that we are able to issue like new loans, and we are like able to approve them and to get also like back them. And I have to say also that about 90%, about 1/4 of these loans are from pawn loans, and the other part is from consumer loans. And if we go to like portfolio and development of that, we have like reached a significant milestone that we have reached 100 million euro of net credit portfolio, and that's like a very like significant milestone for our company, because we are also like exceeding our target, because we have like target for year 2025 of 100 million euros, and we already are exceeding it. And about like 90% of this credit portfolio comes from, of course, from consumer loans, and other part is from pawn loans. And also about commenting about like quality of credit portfolio, I have to say that it's remained stable and quite good. And quarter on quarter basis, we see that it improves. Actually, every quarter the quality of credit portfolio is better and better, and that also drives like our revenues. If we talk about revenues, you see that we have like plus 24% increase on year-on-year basis. And basically, yes, if credit portfolio is growing, if our circular retail sales are growing, the revenues are growing. The other thing there is that also like credit loss expense is growing because of not like bad payment discipline, because of growing of credit portfolio. If credit portfolio is growing, we have uploaded like upfront, we have already like credit loss expense or provisions. If we talk about like profit before tax, we have like stable profit before tax if we watch on a quarter-on-quarter base, but at the highest level which we have, at the significant level of as at end of last year, but significant improvement if we compare to quarter-on-quarter basis. If we talk about profit before tax, of course, it's impacted by revenue because we have improved our revenue stream, but also, of course, costs are increasing and also like financing costs. But the good part there is that our cost to income ratio is, if we look, for example, for like period of 2 years, is decreasing, and it's now about like at level of 45%. Yeah, and now I will go more into details about every of our business lines, and I will talk more about focuses in those business lines. And I will start with consumer loans. And yes, we have like good development in corresponding period about issuance levels and also like credit portfolio. And of credit portfolio, we have like good revenue stream. But talking about focuses in this consumer loan segment, the main focus there is to start operations in Lithuania. We just get like license in Lithuania, and as you know, in Latvia we have like 74% of our revenue comes from consumer loan, and actually we expect something similar in Lithuania, and therefore it's very important to start these consumer loan operations also in Lithuania. The second focus of a consumer lending segment is data and data scoring to better understand our customer. And as I said, we are quite successful to evaluate our customer better and better every like second every like quarter, and but even now we see that there is like good potential to improve that even further. And the last one, in terms of focuses of this segment, is our virtual credit card product, which we launched just this year. At the moment, of all credit portfolios, this part is quite small at the moment, but it is the fastest growing of our segments. And we see that looking forward, I'm actually quite positive about this development of this product. So let's go to the pawn lending, and if we talk about pawn lending, there is also like good improvements in total loan issuance level, in also like gaining more and more of market share of issuance of this product and also like credit portfolio. And we are like increasing our portfolio in revenue from this segment. And talking about focuses of this segment, the main focus is this new product, Digital Pawn Shop, which is a unique product in Latvia. We don't see like similar products in Baltics, and very rarely we see in other parts of the world product like this. And we see that in Latvia and also in Lithuania, where we don't have such a wide branch network, we can develop like this product and to market it and to get like customers also from like towns and cities where there is no our branch. For example, in Lithuania, we have branches only in Vilnius, and therefore we can like launch this product and get like customers from other cities and towns. And other like focus for pawn lending is that we want to develop the service, the better service, and mainly the faster service when we can faster to issue the loans in our branches, and that will allow us to get like even like larger part of market share, because in this particular business line the speed is very like crucial to get like larger market share. And yeah, and let's go. Let's talk about circular retail. This particular business line is about like 10% of of our revenue stream right now. But of course, we need to like look it together with pawn shop because I want to remind you that there is like three main streams where the items which we are selling come from, and they are like one and the biggest one is from pawn shop, and then almost the biggest from pawn shop is the source when we buy those items directly from our customers. And the sad one, the smaller but also like growing part is when we buy those items from third parties, for example, from internet shops. And if we talk about like other results, you see that we have like 12% year-on-year increase of our sales, but we have like very like significant increase in an online store of more than 60%. And we see that I could say it's like blue ocean. I trust that we can like grow our sales in our web shop, let's say 10 times. Uh, if we talk about like focuses of circle retail like business line, then first of all it's like marketing because we see that like adding like performance marketing, brand awareness, we can boost our sales and to get much more like sales on internet shop. And the other focus, of course, is to continue to develop our internet shop or web shop platform to like get like better UX for our customers, and also like we are the third focus on which we are like working is develop we are continuing to develop our branch network. And basically what we are doing, we are extending the shelf meters in our branches, and we are opening those new branches like Banknote XL, and through that we are extending like expanding our shelf meters. Yes, and now I will go more into details in some of specific business segments. And I will start about expansion in Lithuania and what's going on there. And yes, in Lithuania, as you all know, we started our operations in December last year, and we opened like 5 branches. And at the moment, we have 7 branches in Lithuania. We just opened 2 new branches just in July. And what I can say about also like visiting other like competitor branches in Lithuania, we see that we are like best one of visual performance of branches and how we are equipped and overall UX in our branches. But we see that we can be much better and to increase our sales, increase our pawn loan issuance levels. And as I mentioned already, that in Latvia, 74% of our revenue comes from consumer loans. Therefore, our main aim in Lithuania now is to start these consumer loan operations. And in June this year, we get like license from Bank of Lithuania and we can start our consumer loan issuance there. And we are planning to do basically that in this quarter. And I'm quite positive also about this. Uh, if we talk about branch network like development in Latvia, this was like quite successful corresponding period about that. We have a lot of news about that. We opened two new Banknote XL branches. One is in Daugavpils. We actually ec- eh, like uh, take like additional premises and expand selling area of this branch, and uh, and now it's like Banknote XL, and we also have like new design in this branch. And the similar activities was in Rezekne, and there we relocated our existing branch to the it's actually near the previous branch, and also there we expanded our shelf meters, and in both of those branches we see that doing that we are like uh, expanding this selling area, we can boost sales a lot. And the same things happening also in Balvi, where we relocated our existing branch to a new branch. Actually, this branch we relocated to a shopping mall in Balvi, and also there we are seeing like good developments in selling more like these items. And also the similar activities in Riga, Mansell Street, it's in Agenskans district. There we also relocated our old branch to the new branch, which is like with wide, light, like premises. And also all those four branches is in new design. About activities in capital markets, the main focus there now is to our public bond issue, as we already informed that our shareholders have approved 15 million bond issue, and now the team is working on prospect and with Bank of Latvia about this bond issue. And basically, the main aim is to refinance 10 million bond issue, which is maturing in September this year. And a- actually, we have at this moment like 500 bondholders from all our active like bond issues. And taking into account that all those previous bond issues was actually like private placements, but some of them are uh, listed on Nasdaq main list or First North, and we have at the moment also like 9.5 thousand shareholders, and due, through this like to issuing like this new bond issue, we are planning that our active bondholder count will increase significantly. And one of the last slides of me about like team development, let's say if we are getting like superior results, and as you know we have like ambitious targets going further, and actually we are also like quite positive how we can develop this company. For example, as I mentioned, for e-commerce, we see that we can maybe like 10x the results of our e-commerce of our internet shop. We need like also like superior team, and we are like hardly like focusing on that to develop best team. And basically like this year we have like large project to change like organizational structure of company, and we separated revenue from product development, and we created a new role like chief revenue officer, and Edgar Skokins, a fintech and e-commerce professional, joined our team to become a chief revenue officer, and I trust that through this we can continue to boost our sales, and I'm quite positive about that. And also there is like upcoming changes in finance team, as Aldis have decided to have like different career paths from DelfinGroup, and we have like now in transition period also in finance team. Uh, and the new CFO will join the company soon, and we will inform about that. And that will happen in August of this year. And but we have like this transition period for several months, and now this will remain in position of member of management board during this transition period of several months. And also we are focusing on develop our team in uh, other parts like marketing. We are strengthening our marketing team because we see uh, significant like potential in this e-commerce and also like consumer lending to gain our market share there. We are like in developing this team, and also like our data team now is like much stronger like as previously. We have like developed new scoring models through that, and we are like also like continuing to develop this, and we will like finish this project soon, let's say in September, October. So, like good developments about our team. So, and before I give screen to Aldis, we have like a special gift to our today's listeners, and we have like created special promo code. Use code DG Bonds to get like 50% discount for Banknote Online Store for all the jewelry purchases. And now I will give screen to Aldis, and we will continue with business results.
Okay, thanks, Didzi. Yeah, as already mentioned by Didzi, this was another great quarter for us and also for the first half of the year. So next, let's review in more detail how well did we perform in each of our business segments. And starting with consumer loans, the consumer loan portfolio continued to grow also during the first half of this year, as we managed to grow the portfolio by by more than 10 million compared to the end of the last year, and over 20 million when compared on a year-on-year basis. As a result, the net loan portfolio has reached 92.9 million euros at the end of the second quarter. And both the number of active loans as well as the increase in the average loan amount have contributed to that. And if we look on a 2-year period, then we have managed to increase the average loan amount of our clients by almost 60%. The non-performing loan ratio graph shows that there are some fluctuations in this ratio during the first half of the year. Nevertheless, the proportion is insignificant compared to the total loan portfolio at the end of June 30, and it was 1.9%. Since the group also uses third party for recovery of non-performing loan portfolios, then the ratio is dependent on the timing of the portfolio sales. As a result, such fluctuations are normal course of the lending business, and is happening from time to time. The age analysis of consumer lending portfolio shows a slight decrease here as well in the portfolio in the proportion of non-performing loans. Still, the overall proportion is high for non-delayed loans, around 90%. And the reason for the slight decrease is tied to the timing of sales of non-performing loan portfolios, as I mentioned before, since sales happening after month end will improve the ratio beginning of the next month. Also, it's sometimes dependent on the payment discipline for the customers that are due at the month end. For instance, June ended on a Sunday, so part of the customers due on on the last and the day before paid actually at the beginning of July, and that slightly affected also the proportion of non-delayed loans at the month end. Also, the pawn loan portfolio continues to grow nicely during the year and was at all-time high on 4.6 million euros. Although the increase was not as large as for consumers loans, where we had a 30% increase, still an 11% increase on a year-on-year basis is respectable given the size of the pawn loan market and the product specifics. The growth of the portfolio, as well as the average loan amount, has benefited from the increase of the gold price, because I believe majority of you have observed the price increase that started already last year. So on a year-on-year basis, we have managed to increase the average loan amount by 37%, whereby the gold price during the same period increased by 23%, thus indicating that we are able also to obtain goods that are more valuable apart of gold and jewelry. As for the 2024, the increase actually was in line with the increase in gold price. That's around 20%. And sorry, I just a small comment about the repaid pawn loan graph, that although there seems to be a slight dip at the end of the second quarter, that's actually a data issue whereby we transferred our accounting of our pawn loans to a new system, and that's the reason being there's a dip. And actually, if we look detailed in transaction level, then we see that the repaid pawn loans are in the same level as previously, around 70%. The sales of pre-owned goods bounced back to 4 million euros in the second quarter compared to the 3.6 in the first one. And as it was in the case of the pawn loans, also retail has benefited of the increased gold price, since we will be able to sell our gold and jewelry stock at a higher price, resulting in also an increase of the gross margin from 39% end of the year up to 44 at the end of the second quarter. As for the sales split by product categories, then again, gold plays a part here as well, because due to the price increase, jewelry has toppled the sales of smartphones like for the first time in last 3 years. So that's something new here. By considering the diversification of revenue splits, then we can observe an increase of the consumer lending portion by 4% points when compared to the end of the year, as has decreased the retail segment. But that's, I believe, a logical result of the substantial growth in our lending activity we have witnessed during the last quarter. Nevertheless, as mentioned by Didzis, we see a great potential of the retail segment and in particular in online part. So there's then the sky is the limit for that one. Regarding the income statement, then the revenue part is growing nicely by the gross profits by 23%, and for the quarters, and by 21 for first half. Both credit loss expenses as well as the interest expenses have increased due to the increase in loan portfolio. And what I would like to mention is this corporate income tax charge. That increase is still the result of the changes in corporate income tax law, whereby during the first 3 quarters of last year, we accounted for the tax charge just in the amount of dividends distributed. However, currently we account for 20% of all the profits before taxes. The balance sheet increases, and the increase is driven by the increase of our net loan portfolio, an increase by 12.5 million or 14% compared to the end of the year. And that has been financed by retaining part of our profits as well as by increasing our outstanding liabilities from the banks and bonds. When we look at the financial ratios, then I would like to point out that the equity ratio that shows that following the issuance of subordinated bonds that we started at the middle of last year, then we have gradually improved our equity ratio, and the company is committed also going forward to ensure sufficient capital amounts for the comfort of the investors. Also, the return on equity has increased following the sharp decrease at the fourth quarter, but that was as a result of the corporate income tax charges. And however, the effect of the change of the law was significant at the year end. It will be felt also going forward as the return on revenues will be lower as it was in the previous years. And also what I would like to mention the last about these slides is cost of interest-bearing liabilities. Finally, we see a drop here starting from the first quarter and following the reversal of the high interest rate policy of ECB, and the cost will continue decreasing going forward as the Euribor is expected to decrease as well as we will be working on switching variable interest rate debt to fixed rate. Our capital structure continues to be balanced and comprises of various sources such as equity, bonds, peer-to-peer platform, and loans. As well as the maturity spread is evenly throughout a longer period. And following the utilization of the Multitude Bank credit facility, we have managed to increase the bank funding proportion up to 12% and decrease the others. And we also had a new bond issue during first of the half year where we issued a new subordinated bond with a total value up to 5 million euros and a maturity term of 2029. And the aim for this bond was to improve capital structure as subordinated bonds are treated as part of equity when calculating certain financial covenants. And the bond issue is tapped time to time. And one last remark about capital structure, as already touched upon by Didzis, following the maturity of the 10 million notes in September this year, DelfinGroup intends to make a public offering to finance this bond. And we are working on the issue documents and with the regulator. And the aim for this bond is to be accessible to retail investors throughout Baltics. And following the issue, we plan to list the bond on the Baltic main bond list. During the first half year, two dividend payments were made in total of 1.47 million euros for the fourth quarter of 23 and first quarter of this year. In addition, shareholders did approve the distribution of annual dividend for 2023, and the payment was made in July this year. And the dividend distribution for second quarter will be voted on during the next shareholders meeting. Regarding the share performance, then what's important here, then the performance of the shares basically was impacted by the recent share offering that was carried out by two of our largest shareholders. And since the shares were offered with a nice discount to the existing market price, following the end of the offer, the share remained around the price offer of 1.9 euros. And of course, it's also slightly affected by the recent events that took in capital markets throughout the year. Nevertheless, with the current share price and investment in Delfin shares offer a very high dividend yield of 7.9%. Yeah. So, and to conclude our presentation, please visit our website, subscribe to our newsletter, and check our online store and use the discounts that Didis mentioned.
Thank you. We have received quite a number of questions, so let's get to it. The first question has been submitted by a couple of attendees, and it's about entering new markets. In addition to being represented in Lithuania, do you also plan to expand in other markets such as Estonia, or perhaps larger markets such as Poland and Sweden?
Yes, I will cover this one. At the moment, we are evaluating some other countries where to expand the business, but at the moment we are not like opening like this information for public. But yes, of course, all the time we are like looking around what's going on in other countries where is some potentials, and it's our like strategical potential to like to develop business in other countries because we have what to offer in those countries.
Will quarterly dividends be paid?
Yes, as mentioned by me in the presentation, yeah, they will, and that's for the shareholders' vote during the next extraordinary shareholders meeting.
What are your thoughts on changing dividend policy and become first Latvian monthly dividend payer? This would help to attract new shareholders.
Yeah.
Yeah.
Did you cover?
Go on. Go on.
Okay, I will take that. Yes, from a shareholder's perspective, I think that would be very nice to have this revenue stream coming every month. However, we have considered this this approach, but taking into account the administrative matter that would need to take we would need to take into account, it doesn't make sense because, for instance, one option would to require us to prepare basically monthly financial statements to call for extraordinary shareholders meeting, or otherwise we would need to allocate larger part of our equity for the future dividend payments, and that would negatively affect our capital structure. So for time being, it won't be introduced. No.
So yeah, to add, that's basically not. It's not only like cash flow issue. It's more like administrative processes and administrative costs around that.
Thank you. The next question, an investor shares his story, and then there's the question at the end. I first acquired shares of DelfinGroup a few years ago during the IPO at €1.52. During these 2 years, I have also received tiny dividends. Now, during the new share issue, I bought shares for €1.09. I'm still in a very big loss because my average share price is now €1.42. Why do you think there is such a negative development of share price, even though the published indicators are good? You partly addressed this question also during the presentation, but if you would like to add something here.
Yeah. To add, maybe yes, I could say that I'm not like satisfied with share price as well. because we see like a very good development of the company. As I mentioned, for example, if you look at for credit portfolio, it's more than 2.5 times larger than the period of IPO. So the company is much larger. And, the revenue is almost like two times at the period of IPO, and also we are like a much more profitable company. If we compare that with period of IPO, of course, we see that there was those share offerings which decrease the share price, and we don't see so great activity in our stock exchange. So that could be the factors, but looking forward, I'm actually quite positive because I see that we can like develop the company to get better and better results, and at one point you will see that in also in share price, and in period after IPO we have like paid out in dividends about like 25 cents for the share. And maybe Aldis has something to add.
No, I think you covered it pretty well. So I guess saying like 25 cents, it's not a small amount. It's 16% of the IPO price that has already been returned to the shareholders.
Mhm. Thank you. Does the company have any plans for share buybacks to enhance shareholders' value and support the stock price?
Yeah, I am covering this one. Uh, to answer shortly, no, we are not considering share buybacks because right now we see a more we see where we could spend the cash better, and then also it would not make sense for us to borrow funds and then to make share buybacks. These are usually done if the company has excess funds and they are and it returns back part of the funds to their investors either in the form of dividend or share buybacks. And we have used the latter one. We are doing that through dividend distributions, not share buybacks.
Could you give us a guidance on the credit loss percentage against gross portfolio?
Mhm. To answer this one, I can say that our guidance remains in the same level that we actually have for the last year, and it would be around 11, 12%. We don't see any reason to change that.
Mhm. Let's now zoom in into Lithuanian business. How would you compare Lithuanian consumer finance market against Latvia? And also, are there any important regulatory differences that would, for example, impose a cap on your lending margins or fees?
Okay, I will cover this one. If yeah, if we look at consumer lending business in Lithuania, there are some like companies which are overlapping, which are working also in Latvia and in Lithuania, and soon also like DelfinGroup will work in both those markets. If you look at the regulatory landscape, I could say that in both countries there are regulators and which watch very strictly how we are like operating with our customers. And in Latvia, I could say that the regulation is very strict, like the strictest in maybe in all the European Union. And I don't see like risks about that. But if we compare like about cap ratios, about like product offering, I could say that it's actually quite similar in Lithuania. There is the interest rate cap is a bit like higher, but not so much. So basically, it's like quite similar. But if you look at portfolio levels, it's I guess it was a bit smaller than in Latvia, but also like quite similar. Like if you compare like cap ratios, also like portfolio. Portfolio per capita in Lithuania is smaller, but total portfolio is quite similar.
Mhm. The next question is specifically about loan portfolios. So what size consumer loan portfolios do you target in Lithuania, and what is the expected timeline for this?
Expected timeline is this quarter to start operations in Lithuania, as we already have like a license for that. Now we are like in preparing phase for that. So to set up systems, to set up procedures, and to do some studies for our employees, and basically to start all the operations, which is like largest part of all of that. Uh, but yes, that's basically about that.
Mhm. How are you going to capitalize the Lithuanian entity for the lending operations?
Yeah, to answer on this, we will do that by using part of our retained profits as well as it needed to borrow.
Mhm. Could you explain why the capitalization ratio covenant calculation methodology has changed compared to the methodology presented in earlier reports? Is this the methodology for new subordinated bonds issue? And why did you not keep the calculation unified across the issued bonds?
Okay. Uh, Yeah, it's hard to tell which periods have been compared, but the calculation of the capitalization ratio actually hasn't changed in the previous quarters as it's presented in the same way. And actually, we have unified all of the approach throughout all of our bonds and also in other lenders, and we have the same covenant and same parts how it's calculated, and it doesn't come from subordinated bonds. It's based on our unsecured bonds requirements of them of unsecured bonds.
Are Q2 2024 administrative expenses a good proxy for run rate calculations, or should we expect further increase given your ramp up in Lithuania?
So basically, the question is about like our administrative costs. Actually, as I said, that this cost income ratio is in good level for our company, and also we are like tracking like the targets like employee cost to income, and all both those targets are decreasing right now. If we like watching like period, maybe some year, 2 or 2 year period. So I see that in totally there will be increase in those costs, but if we watch effectively from from if we compare to income, then there should be continuously like decrease in cost income.
Mhm. When should we expect new financial targets to be presented?
Yes, to answer this one, actually, we are in process to review our financial targets for the group, and based on the results, let's see if they are different from the ones that we have made public previously, and if so, then we will be publishing new ones in the coming months.
Mhm. Could you give us an update regarding the advanced corporate income tax payment appeal?
Yeah, to have it short. As some of you might read, we have made an appeal to the court regarding this case. The court has accepted our appeal. However, the constitutional court takes quite a long time to review it and come up with a decision. And as commented by our lawyers, we should expect at least 1 year for the courts to review the case and to come back to us.
Your credit loss ratio, measured against gross portfolio, remains high, while industry in general shows decline in the respective ratio. Either your clients have become more riskier or a loan session becomes more expensive. Which is it?
Um, Most probably to answer this one, I would have to know which are the pairs we have been compared, because if I look at the way we are recording loan loss provisions and also the percentage wise, I don't see an increase or worsening of the portfolio. One explanation for that might be that the peers that have been compared are using different accounting principles. They are maybe not using IFRS, where that requires to record provisions beforehand and not when the event of default has occurred. So yeah, I can't give answers more answer on this one.
Are there some additional plans of benefits for stockholders?
At the moment, the main benefit, of course, is dividends. But going further, maybe we will develop some program. Maybe that will be something linked to like our web shop or something like that.
Mhm. And currently, the last question that we have received, is there a plan to also sell insurance for loans, like some other Latvian competitors are doing?
Yes, thank you. About this, at the current pipeline, we don't have like such plans to like sell insurance.
Thank you. All questions have been covered. The recording of the webinar will soon be available online. Please subscribe to DelfinGroup announcements and keep up with the news. On behalf of DelfinGroup, thank you for joining us today.
Thank you.
Thank you.